Alright, hello guys, and glad to have you on board again today. You know what time it is, so let's have a quick look at the evolution of our current flow sessions. So the thing in here, same old story as it was last week. Pay attention to the recent volatility updates, which leads us to believe that this is more an appropriate time to reduce exposition to risks instead of taking very high leverage positions and short stop losses, though in that same context, that's exactly what I do. Still, last week what we've mentioned is that on the flow trade, we still, even though we maintain the high level of uncertainty in which we still don't know if we're going to go lower or higher. So when we have two possibilities equally weighted, you're always going to follow the low risk strategy, which means you're going to favor the bullish side in here because the low risk strategy is bullish. All right. You could be right, you could be wrong, and it's nothing you should really pay too much attention to. I see a hell of a lot of traders right now having a very dangerous bias of fearing losses, which means basically you just don't want to be proven wrong. And that's a big, big problem because most of the time that means your ego is playing in that trade. And for whatever reason, you're going to be personally impacted if you get proven wrong. Well, reason is, whenever you flow trade, remember, it only provides results out of statistical odds, which means this is something that has to be repeated multiple times in order to be relevantly profitable. Otherwise, it's nothing but just throwing a dice. On a single occurrence trade, well, God knows if this one's going to be successful or not. It's just out of 100 trades, there's no way you can lose money if you've applied the same rules to these 100 trades. So try to remember that. It's very, very important. Most of the time, these are egoistic reactions that force you to just go into the natural biases just because this time around you feel like you don't want to be proven wrong. Well, you could very well be, and you should nearly give a fuck. All right? That's really the way it is. Until then, well, this is what we have. We had a nice flow. We had the moving average far going below the rising context on the H1 time frame. We had the third range boundary in here. The market has reacted, and we've always mentioned I will pay the Bollinger Band, the opposite Bollinger Band, because that's what the flow sequence tells me to do. Remember, the flow sequence is just like that. We've been doing a full set of 3 upward flows, so we had to let go for 2 consecutive flows separated by a third range boundary. Our third range boundary in here has been squeezed, but the thing in here tells you that it could be, all right? It can be in here. That's the only way in which a third range boundary can be squeezed in the entire structure, okay? Though the thing is that then we need to see the beginning of a new sequence of flow, which is exactly what we've had. So for now, we needed to wait for a third range boundary. That's what we have. So where are we in the sequence? We had to pay the moving average or Bollinger Band. So like I said, I am personally going to buy the Bollinger Band, so here I am. As we do have a volatility alert, I've been taking half my usual position sizing and doubling my stop loss. And that's basically the way it is. So right now on my flow sequence, here I am. I have paid, and I'm waiting to see if the market is going to break the previous high point. So that's the way it is. Flow trading in the S&P, I bought here, stop is in here, and well, I'm waiting for this to be broken. And if it is, well, what do I do next? I'm going to wait for the moving average to step aside from the context, okay? Because that's the next step. Remember, that's what it is, okay? Next step in here, in that flow, in that sequence of flow, is that after breaking the previous high point, I want to see the moving average going below the context, okay? So right now, my moving average is inside the context, so I want to see prices breaking above, and then I want to see the context moving faster than the moving average, and that will be the confirmation. And then, what am I going to do? I'm going to let myself ride that thing for as long as it does. It can be short, can be long, who cares? I'm not going to do anything until I get a third range boundary, all right? So that's really the way it is. You have to repeat, rinse and repeat. It is outrageously uncomfortable because these sequences vary quite a lot in terms of amplitude and duration. Sometimes flow trades are very short and narrow. Sometimes they're very impulsive and short-lived. Some other times they're very less productive in terms of yield, and they last very long in terms of period. And then you have something that has a very, very slow shape. Okay, that's really the way it is. But the only thing you know in a flow sequence is that lower highs will be there, higher lows as well. That's the only thing you know, all right? There's no overlap or whatever shit that is. In flow sequence, it's really randomly distributed like crazy. There's no way for you to predict where it's going to start or where it's going to end. It's entirely dependent on these volatility boundaries, all right, and third range boundaries on the flow. So until then, well, just embrace that uncertainty instead of trying to fight against it, all right? So same old repeated stuff. Learn this fucking sequence. You've got the cheat sheet now. I shared this thing, so just have that thing all across the board. When you do flow trade, have that image close to you so that you can see where you fit. All right, and once you got the context, well, this is just, remember, one trade out of 100 in which you should do similar decision-making processes. All right, so this time around, don't make this trade specific because for whatever reason you want to win that one, for whatever reason there is, or you just really don't want to lose that one, all right? Of course, I don't want to lose either. I'm just like you. I've been making those mistakes over and over again in the past. Now I know constantly that I need to remind myself that, of course, losing isn't pleasant. I don't like losing, all right? Just neither do you. But the thing is that I know that this can't trigger any emotional reactions. The fact that I don't want to lose doesn't mean I need to change the risk management of these trades. That's the same old reason. The only thing that can alter my risk management is what I see. So like I said, I see noise, though I do trade, but I do trade with limited risk taking, all right? And this trade, is it going to work or not? I don't care, and I really, really, really don't care, and neither should you, all right? So that's the way it is. The thing is, like I said, just like you do, I'd rather like to have a win rather than a loss. But the thing is, I know it's not going to impact me anyway. I feel those things, but I don't let them push through, all right? I can immediately dampen those psychological expectations. All right. Second thing that I've been asked to do by the French community, and I bet you probably want that as well, and anyway, for equality purposes, I'm going to do it for you guys even if you didn't ask for it. A broad analysis for Atom, okay? So same story, I'm going to go for Bitcoin first because there's been some requests out there. Though very quickly go in Bitcoin and then full analysis on Atom, all right? So the thing is in here, remember Bitcoin is 4-hour chart flow trading. We had that very weird area in which the third range boundary ended up being fucked just because we had those very rare expanded wedge structures, so very untechnical. But there was one significant element that shifted the balance is that you've seen that the prices have significantly V-reversed out of the rising moving average. So you know this is where the flow trading is. Because prices have gone up out of a low risk area, okay, the low risk area needs to be 3 time frames above, and there's definitely a low risk area in the monthly. Though in this area, Bitcoin has gone to a monthly low risk area, bullish, by the way, and it's created a flow trade, all right? So the flow trade in here has been very weird because the third range boundary, like we stated, couldn't really play its game due to this expanded wedge structures. The context are just not doing their job because, well, the indicators don't know how to work around this shit. But anyway, that's the very only structure. Remember, when you see those expanded wedges, indicators will obviously get lost because there's no other way around. There's no perfect indicator that can fit every market condition. And, well, good luck finding any strategy that does anticipate that, okay? So anyway, you've got this thing, market reacting on the Bollinger Band. So same story. Okay, if you go for the flow trading strategy, what you have in here is AKA first area, weird third range boundary because of the expanded wedge. It paid on the moving average and it broke the previous high point. All right, so that's the way it is, breaking the previous high point. And then as you can see, context are rising faster than the moving average, which is, yeah, this thing. So what's next? Third range boundary, folks. All right, so do you see a third range boundary here? I don't see any, all right? We're going from context to context, so I know now that if we keep going lower, we're going to get that third range boundary. Is there a delayed third range boundary? No, there's not. Anyway, do you see a delayed third range boundary probability written down in here? No, it's a third range boundary. I don't want it to be delayed, so there's no way it can be delayed. If it is delayed, we're always going to go back there, look for that level again, all right? So when you have a third range boundary, delayed one, if there's ever one, all right, you're going to get to know the third range boundary delayed when it broke the previous low point. So what do you do in these cases? You're going to wait for another market rebounds. It always does that, all right? In flow trade, this is always the way it is. Anyhow and anyway, your stop is at break even and you shouldn't be fearing. So if Bitcoin goes there, oh, Sherlock, we're all going to die. That's exactly what I see now in every social media. It's basically if the support is broken, that means the market has rejected 30,000 with whatever shitty structure that I've seen. Some people drawing, I don't know, head, shoulder, shoulder, or what. I mean, it's really staggering. Like I've always said, you don't do technical structures in flow trading. You don't do anything like trend lines and stuff like that. They're always meant to just trap the dumbs, all right? The only thing you should be bearing in mind when you do get to trade this flow trade is the third range boundary. When you get one, you know that you're going to have to take your profits. And anyhow and anyway, if it's a delayed one, well, that means you've missed the shot. So normally, remember, the market will always go back to this level to give you the opportunity to take your profits. All right, that's the way it is. So you don't take your profits late because you feel like, no, anyway, your stop's at the break even. Worst case scenario, the market is going to take that stop loss. But bear that one in mind. I've rarely seen that one happening. I don't even have an experience in mind. So that's really the way it is. Most of the time, if there is a delayed third range boundary, we're going to go back to the level itself. All right? So in any case, be patient. On the other hand, in here, we don't have a delayed third range boundary. So I'd like to see the market, first of all, reversing the context, rejecting the bearish context afterwards. Okay? And that is where I will take the profits. Okay? But also remember that we can just squeeze it all out. And in that sense, well, good luck with that. We're just going to keep pushing higher. So I see absolutely no reasons to be concerned about the current trading sessions in the S&P 500, nor the cryptocurrencies. There is going to be a market decision, and there's no way you can predict which direction it's going to be. I see just so many people trying to figure it out by taking immense levels of leverage and stuff like that. Just try to make it easy on you guys. There's no way for you to know. And it's certainly not making tremendous position sizing that's going to help you around that thing, all right? Though, I'm waiting for this now. Either we're going to just go right up, okay? And there's not even going to be a third range boundary. We're just going to buy, okay, this thing. And it's going to go making high highs. And that's just a sign that this flow trade is just keep going on. If and only if by the end of that week, we end up reversing the context, that will be the sign to me that we're going to have to rebound to make a third range boundary, where those who bought were going to have to take their profits. And that's really the way it is. And the other way around, the worst case scenario is we go all the way down and you're going to take your stop loss at break even. Though, hear me well, this can happen. It can. Is it the likeliest option? By far, a no answer in here is very significant. So all I can say is that, yeah, it can happen. If it does, are you going to die? I won't. I personally don't give too much attention to this, all right? I see people just trying hard and hard to predict the future, most of the time because they've been putting way too much leverage on existing position. So it's a kind of a life or death situation. If you're right, you're going to get rich. If you're wrong, you're going to get broken. So it's really stupid thing, okay? Remember, once again, if you go down this rabbit hole of taking too much position sizing, too big, basically, yeah, it's going to be a life or death situation on each and every trade, where I just told you the opposite. When you flow trade, you shouldn't be thinking about life or death situation, but quite like, yeah, out of 100 trade, I'm going to make a bunch of money out of this. It's certainly not going to make me a millionaire, because remember, flow trading is nothing but just, yeah, filling the blanks. When there's nothing else to do, yeah, flow trade. It's just going to get you to practice trading on a regular basis without necessarily waiting for the low risk strategies, which are most of the time trading on much higher time frames. All right, so that's the only thing it is. All right, but remember, flow trading is very demanding in terms of psychological management. If you can't figure out your way out of these psychological emotions, fear of uncertainty, and impatience biases, well, god damn it, then flow trading is probably the worst place for you to be in. All right, because this is where the market makers maximize the pain, all right? Playing on uncertainty and volatility, though impatience, all right? Though be very, very cautious, okay? Though last but not least, you guys wanted a full review analysis of Atom, so I'm gonna do it. All right, so very quickly, we're gonna have to look at the larger time frames in here to see what's at play. So let's start with the monthly, and yeah, okay, monthly, we got just a pair of context, very recent ones, so that means in here we're starting to figure out a sense of value in the monthly charts. Though okay, and what do we do out of this? Well, I goddamn don't know. To be honest, I don't figure it out. All I can see is that the moving average is in the middle of these contexts. I don't have any history to back those claims. These are the first context boxes. So all I would say is that by neutral assessment, I would consider that a range. In the monthly, I would say, okay, this is a range. So I just put my Fibonacci levels, remember the context boundaries, and that means, well, this is the dump zone. I never trade in here. Here I can't sell. The only thing that's possible is to buy, and in here I can't buy. I can only sell. All right, so you've got your low risk areas. Do I need to go anywhere further than that? Yeah, no, I shouldn't. I mean, it's really that simple. Monthly is a neutral range, at least for now. We don't have any more further evidence. So in here, can't sell, can't buy. So you got a buying area, selling area. That's really the low risk stuff that there is. So 4-hour chart is where we go, and we do it easy on us. All right, this is our big low risk area. Though, where do we go from? Okay, testing the area. Do I have a positive reaction out of this? Meaning that the prices should retrace and reverse the context, leaving the context to cross above the rising or flat moving average. That's exactly what we have. So, hey, where are we in the sequence? We go test the low risk area. We've got the first positive reaction. Prices cross over the rising moving average, and then the Bollinger the context follow through. That's exactly what we have. Okay, what do we want next? Okay, what's next in the sequence? Third range boundary. Do we have one? Yeah. Okay, so that's a check mark in here. Though, what do we have next in the sequence? Paying the moving average of the Bollinger Band. So I could have bought in here. To be honest, I wanted to, but that was FTX bullshit. So basically in here, good luck if you bought the FTX saga breakdown, but that's basically the moment FTX broke down. So in here, moving average, yeah, kind of a weird move, but it was definitely an area to buy despite the FTX context. The market went down to the volatility boundary where anyway, PDF manual says you need to buy that Bollinger Band anyway. So if you bought the moving average and got stopped out, you needed to try again for the Bollinger Band. Okay, so you go again, Bollinger Band. And what's next in the sequence? Breaking the previous high point. Okay, so currently I've checked this stage. This is where I traded. So I should probably have some kind of a stop loss somewhere around there. Okay, anyhow and anyway, the maximum stop loss is the previous low point. So let's call it that there is a stop loss in between this level and this one, because this is where I should have bought. All right, so that's the sequence we're in. And then where are we now? What's all that? I mean, oh, this feels utterly complicated, Phil. Though remember, you can have a look at this on the higher time frame, which generally makes it easy to see the whole sequence. So that was, yeah, first flow trading. Okay, consolidation failed on the moving average because of FTX, but bought the lower Bollinger Band, got right up, and did it validate? Did it confirm the trade by breaking the previous high? No, we do not. So we're still there. There is a stop loss here. There is a confirmation here. And until then, well, God knows. You're in position, and there's nothing you should pay attention to. All right? So if you look at my chart, that's exactly what I have. I know one thing. Either we're going to go there. That's going to be sign of invalidation. The market is willing to go for the stop losses, and God knows what's going to happen next. Option number two, I don't give a fuck what we do here. We're going to go there, and that's going to be the end of it. And remember, the uncertainty maximized by the flow trade means you don't know anything about this being that. All you know is that once we go there, there's going to be a flow. In this flow, remember that there are two axes, all right? The y-axis and x-axis. And basically, there can be so many variables of this, which means the flow trade could actually do just something like that. All you know is that it's going to go make a higher high. All right, it can be very slow and painful, and there's going to be a third range boundary, and you only manage to get right up there. All right, that's one possibility. The only thing you know is that we're going to break this, and you don't know how far it will go afterwards. Could very well do something like that as well. That could be possible. A very short-lived but extremely rewarding kind of flow trade. Only thing you know is that anyhow and anyway, If it breaks that level, you're going to let yourself doing that ride until the third range boundary is traded. All right? That's all you know. So that's it. For my analysis on Atom, I see so many people right now being concerned because it doesn't go well. It's just going down, Phil. I'm buying and it's going down. We're trying to make it easy on you guys. Honestly, I don't like it either. I really, really don't like. I mean, Cosmos is a tremendously interesting project, and seeing this one going down doesn't make me happy as well. And you have to understand that. I'm not happy with what I have in front of me. But does that make me triggering any trade because of that? Well, certainly not. There are so many things that concerns me as well. But in any given moment, I will never pay attention to this. From the things that I don't like, yeah, for example, the fact that the first flow is pretty weirdly built. It's really like kind of very choppy and very short-lived compared to the very long and painful consolidation. But all I know is that for now, we haven't broke the previous low point. And only until we break the previous high point, I will be able to confirm the second flow as started. For now, all I know is that I don't like that. Yes, that means the consolidation has been lasting twice longer than the previous actual upside move, but the reality is that, well, there's nothing I can do about it. It's the same old story. What is disappointing and really, really bothers me a lot is, yes, it's long. But remember what I said, whenever your feeling goes about it's not going high enough, or it's taking too long, or it's rising too quickly, or whatever, all of these assumptions is you trying to set the stage for the market to behave the way you want it to be. The reaction is exactly the opposite way around. You control absolutely nothing. The broker does, and the only thing you can do is to accept and deal with it. All right? There's no way for you to control. The only thing you need to assess and accept is that you're gonna have to let go. Otherwise, flow trading is certainly not for you guys. All right? It's very, very dangerous to try falling for those narratives just because you want things to happen the way it should be, or you think it should be. All right? It's nothing like that. You know, flow trading can only be profitable if you repeat the same old fucking process hundreds of times. All right? Despite that, and I'm probably the worst person in here to mention that, I am deeply involved in Atom. It's a significant overweight in my portfolio. But the reason is, everything that I do with Atom is rational. I have 2 expositions for Atom, actually 3. I have one that I will never sell because I believe in this project in the long term. And like I've always said, some of what I put it into Atom is never, ever, ever, ever going to be put it out. I said, I'm willing to go to zero. I'm willing to go down this road for some of the investment that I have. It's somewhere around a third of my current exposition to Atom, all right? Another third is a longer-term investment on the low-risk time frames, which was weekly or monthly, and both ends, well, this is an area to buy, not an area to sell. So the only thing that's going to take me out of this investment is duration. The investment has a cyclical behavior until next year, all right? And I've mentioned that in the past multiple times, so this is not something new to you. These investments, I will not take them off the table until mid next year, at least April next year, all right? That means, well, if we're still trading in these areas in April next year, I'm going to have to take the losses on this part of the portfolio, and I'll still have a third, all right? And the last third is these flow trades, which means these are margin trades with stop losses, all right? And that's the way it is. Can these trades be invalidated? Yes, they can. Am I going to like that? Of course not. Is it going to change anything in my longer-term trading applications? Absolutely not as well. I'm going to be there to trade the next one as well. All right? So try to remember that. All right? As long as you make things personal, as long as you put your house on the game, thinking to make it a life or death sentence, it's definitely not suitable for long-term trading. The thing is that, yes, of course, I won't like to see Atom going down, but if it does, I'll do what I have to do. And there will be next trades. There will be other ones. All right? So that's the difference. The thing is that I don't like to be the one that always says, yeah, you're really doing shit. I know how to do things. I'm the best one out there. No, it's really not. Just to be honest, I do feel those things as well today. I just made those mistakes so many times in the past that I know one thing today: they must not trigger actions unless these actions are part of the plan. So the plan now to me is just, I know where I am, I know which risks I'm taking, I know the consequences of both ends. Of course, I always project on the positive side of the equation. I also know that the negative answer is sometimes part of the equation as well. So until then, well, there's only two things that's going to happen. I can fall for uncertainty biases or impatience biases, and I don't do that anymore. So yeah, I don't like the uncertainty of why the heck the prices don't behave the way I think they should. Yeah, I do feel that as well. I think Atom is absolutely underpriced, but yeah, what the heck? Does that mean I'm going to trigger a preliminary exit for whatever reason, or reinforce existing position because I think it's a tremendous opportunity? No, I don't do that. Second stuff, well, yeah, I do think it's lasting way too long, that we shouldn't take as long as we did for consolidating those trades. But until then, well, it's neither validated or invalidated, so I just wait. And that's the thing. I do feel the emotional pressure. I'm not a robot, but the reality is that I've learned through it practicing that they should just not triggering any trades, okay? I feel, but I don't act. And that's the thing that I hope you will be learning as well as you get more familiar with trading over time. All right, until then, people wanted to have my full updated analysis on technicals for atoms. This is what it is, okay? And like I said, I have a big exposition on this thing. I'm overweighting the existing position. I'm also having 3 positions on these assets, so which is something that I rarely does. So yes, I do have a lot of money implicated in atoms, but that doesn't mean I'm going to trade these assets differently. I do follow the same old guidelines, okay? And I always will. If stop losses have to be taken down the road, I will. If you think I'm stupid enough not to do this, you really, really don't get it, all right? So that's the way it is. I hope it clarifies some of the things, all right? And until then, well, I also hope that it helps some people to just reassess some of their trades. Remember that if you've been gambling your house on just Atom or whichever other assets, that's very dangerous. That means the mistakes have been made a long time ago. You should never, ever repeat that, okay? That's really the way it is. Always trade in control, and don't try to control what you can't control, okay? In flow trade, you really have very little control, and it's going to be very unpleasant in the first times you do it. Get to learn how to get over it, all right? You can't get any bit of control over the flow trades. You are not in control. The broker does, and it can play around with very, very impactful techniques. Just don't be fool enough to fall for this, all right? Until then, that's enough for today. Bye, guys. Have a good weekend.